studied called Accounting, Organizations, and Society. It was a study of the role of accounting in businesses and the coordination and control of organizations within the public and the private sector. Accounting once focused on production alone, but now accounting focuses on the entire company in all its departments. In the private sector, budgets focus on each division and how those budgets communicate interdepartmentally. In the public sector, accounting focuses on budget performance and judging the overall organization's performance. And the study also went on to talk about the organizational and sociological approaches and studying how accounting monitors individuals and individual units. Excuse me, departmental responsibility and motivation of individuals. It was saying that there's emotional and psychological factors to the production, not just production alone, and so those things need to be taken into account. And the purposes of accounting in city governments, for my example, is that accounting offers a control tool to monitor individuals and the performance of the department as a whole. In my second article, Know When to Kill Your Brand, the author really stresses recalling what your original purpose was for the brand and making sure you're still being true to that brand and not compromising it by changing it or changing with the tides of the market. So when you've decided if you are still staying true to your brand but it's still not working, the author suggests thinking about, is it still relevant to your customers? Is it still relevant to your company? Is it producing revenue? And so you need to just make sure you're staying true to what the brand was created for and deciding if the purpose is still relevant. She states that it's better to kill your brand than to let it die a slow death. And the example used was Blockbuster, how Blockbuster just fought to survive and it slowly died out, and now people don't have faith in that brand anymore. And if they would have recognized early, they could have sold the assets while they were still valuable rather than completely filing for bankruptcy and not even being able to resurrect the brand. Another example that was given was Frito-Lay has Cracker Jack, and they hadn't marketed for Cracker Jack for years and years, and they realized that the brand had almost disappeared. But then they discussed whether or not the original purpose for the brand was still relevant, and they recalled that Cracker Jack is mentioned in the song Take Me Out to the Ball Game. Everybody knows what Cracker Jack is. So they decided that it was more important to resurrect the brand than to try to recreate a new brand for caramelized popcorn. And so that was a smart move on their part for Frito-Lay. Another example is a dance company called Ritmo and Fuego. Their original purpose was to entertain normal people, so not just dance enthusiasts. But they realized that they had branded themselves into one demographic, which was the Hispanic demographic, because of the name being in Spanish. So they changed the name and were able to bring about their original purpose, which was to entertain the masses. In my third article, Brand Value, Hidden Assets in Plain View, we discuss brand value, which is an asset, but it's an intangible asset that's not always recognized on IRS tax forms or from creditors, but it should be considered when launching a marketing campaign, for example. But what is brand value? Brand value can be described as, think about Coca-Cola, think about RC Cola. Which one do you recognize? Which one do you trust? You'd probably go for the Coca-Cola because you're more comfortable with it. That's brand value. And brand value can be used to leverage getting loans. You can use your trademark, your Disney trademark, your Coca-Cola trademark to get a loan just because people know who you are. And so before you launch any marketing campaign, you need to take into consideration what your brand value is and assess that in a numerical term for yourself as a company and decide how much it's worth. And you can also use your brand value to determine a licensing cost. So let's say Harley Davidson, they want, a jacket company comes to you and says, I want to put Harley Davidson on my jacket and I'll give you a percentage. And you got to decide as Harley Davidson, how much that's worth to you and how much you're going to charge that company to put your brand on their clothes. So another example is a performing arts center. So they're about to launch their marketing campaign, and it's successful, and the marketers or the customer service department might say, hey, it's successful because of our efforts. But what you need to do before launching the campaign is decide, how long have we been in business? 20 years? Is our name recognition going to help in selling these tickets? So you need to put that into a numerical value to decide what that value is, so that you know how successful that marketing campaign might be. My final article was, what is strategy? It's all about, in order to outperform your competition, you need to do something different in order to differentiate yourself and distinguish yourself by establishing an overall difference. The problem that we're seeing is that everyone's focusing on operational effectiveness, which is great, but it's easy to mimic. Operational effectiveness is talking about getting management tools, getting better systems, motivating employees better, all these systems and tools that are easy to mimic. So all of a sudden everyone is increasing at the same levels and nobody's really standing out. So operational effectiveness alone is not sufficient. What we need is a strategic vision in order for your company to sustain profitability and really stand out. Operational effectiveness does not translate into profits. What's happening is everyone's having to lower prices and everyone's being pressured to minimize costs, and so nobody's really getting ahead because these systems and tools are really easy to imitate. What we need is unique strategic vision, as I mentioned, and that isn't performing different activities. Excuse me. Strategic vision means you're performing different activities or the same activities better and making them stand out in different ways. So an example of a company like that is Facebook. Facebook is creating user-friendly, synergistic user advertiser possibilities that drive traffic to their website. So it's driving users to the website, and then it's driving advertisers to the website. They're constantly coming up with creative, different activities that make it stand out and make both people happy. So this is the end of my presentation. My name is Bobbi Keay. Thank you for listening.